Welcome to another episode of Databytes Enabling AI, the series where we decode how AI, artificial intelligence, is transforming industries, unlocking new opportunities, and reshaping how we work, lead, and how we go about our business. Today, I'm very excited to welcome Tom Kuslikis in our new episode today, where we are actually talking about how the credit union industry is being shaped by AI, and how especially EFCU and Tom are planning for unlocking the power of AI as they build what's next in the credit union industry. Tom is the Chief Executive Officer at EFCU Financial Credit Union. And it's a very interesting story, very amazing story. EFCU Financial has an amazing legacy. It was established way back in 1930s as one of the first 13 chartered credit unions. I'm privileged to have you on, sir. So thank you very much. To introduce Tom, he holds an MBA from University of Michigan with a dual degree in accounting and business administration. And he's also a CPA, certified auditor, and chartered global management accountant. So all credentials that reflect both depth and rigor in what he brings to his everyday role. Beyond his day-to-day leadership at EFCU, Tom is actively shaping the future of AI in financial services, especially sitting on boards of Louisiana Credit Union League, working with LSU, Louisiana State University's Computer Science and Engineering department as an industry advisory board. And he's on the board of Luminant Innovations and CU Assurance. So thank you very much for participating in this great episode. Really appreciate your time, sir.
Yeah, excellent. Appreciate you taking the time to have me.
So, Tom, we are going to start exploring how AI is going to reshape the credit union industry. And it's truly transformational, especially when you think about the mission of the credit union industry and how AI is essentially taking a very different approach to that, just the written mission. Now, I'm sure there are many ways to unlock it, right? So I would love to start by asking you, right? EFCU has been around since 1930s, one of the very first credit unions. So how does that legacy sort of shape how you think about the world of AI?
Our original select employee group was Exxon. So that's kind of how we got our start. We were the credit union for the Exxon refinery here in Baton Rouge. And, we got a very affluent membership base that has high expectations as far as, the type of technology that they would expect from their financial institution. And so really over the last 3 years, we've been investing a lot from a technology standpoint to, really just put us in a position to better serve our members. And, AI has been a part of that as well, and will continue to be a part of that.
How do you balance the whole mission of credit union with the advent of technology? And how are you sort of thinking about that? So usually what we have heard in the industry is AI will take over jobs. AI will, these are all the far-fetched thoughts that folks have, right? And AI will do a lot of the things that humans are doing. What is your philosophy? What is your thinking on that front?
So my philosophy and what I've shared with the team, I've really put a lot of emphasis on, we're going to leverage technology, artificial intelligence to do a lot of the mundane kind of routine task. And so, whether that's, a type of a cash transaction for a member, or, just handling a question like, what's my balance? And, try to take some of those routine transactions off our team members' plates and, free up their time to be able to have a more robust conversation with our members and, help them find different products and solutions that can, meet their respective needs. And so really, with investment from a technology standpoint, we would never lay anyone off. Really the mindset is to try to take as much of those mundane tasks that we can off their plate so that ultimately they can have a more robust conversation with our members, but then also, put them in a position where they can step away and see the forest from the trees and be able to think more strategically versus, kind of just spending, the bulk of their day on mundane tasks.
That's a fantastic way of laying it out, right? So I have to ask you've this is going to be interesting, right? Because you've spent your career in finance and in audit before stepping into the role of the CEO. How does that shape your thinking on technology and AI?
Well, I'm really big on efficiency and effectiveness, and weighing the return on investment of all these different initiatives as well. And so, any kind of new initiative that we're looking at, we do create and look at kind of the return on investment, whether that's reducing costs, increasing revenue, or ultimately just service, an increase in the level of service that we provide our members. And so, we're not going into some of these investments kind of willy-nilly and just without performing a really robust kind of analysis of what the costs are versus the benefits. And so, having that background and experience from a finance and accounting standpoint, I think really put us in a better position to, look at what the benefits are and, outweigh and looking at them to see, if they outweigh the respective costs.
From an industry perspective, Tom, what we keep hearing from the industry is that it is very difficult to monitor and truly understand the cost and the benefit, right? So I'm going to lay out both, right? So there is the efficiency play, which is difficult to measure unless you're, I'm curious, how are you doing that especially for all your AI investments? Because we've heard that that's the most challenging aspect of some of the AI investments.
Yeah, so one way that we did it is, when we rolled out our new voice bot, this is 1.5 years ago, rolled out a voice bot in our contact center, really we looked at the estimated amount of calls that the voice bot could take, looking at the types of calls that are coming in, if they're more like, what's my balance, where's the most nearest ATM, and so on and so forth, and comparing that to the costs, the salaries, and the benefits that relate to our respective team members, and then layering in the estimated amount of growth based on historical numbers. And ultimately what we found is making that investment into that voice bot and the amount of calls that it could handle, and would help us reduce the amount of investment that we have to make from an FTE standpoint. And so right now that's been a very solid investment for us. Our AI voice bot ultimately handles about 50% of our calls that are going into our contact center. And over the last 1.5 years, we've seen a large amount of growth too, as far as membership, and then also the amount of calls that we're getting into the contact center. And so, making that investment, and rolling out the AI-based voice bot, has been really helpful from us.
That is a perfect example of how you should, deploy, measure, monitor, and look at the effectiveness, right? You're measuring the cost efficiency, but you're also measuring the membership growth, which sometimes is difficult. But I have to ask you this, right? Credit union clients and members usually expect the human interaction, usually expect you to put, as a credit union, members first. How are you managing that relationship part? And how are you balancing that with sort of moving this into the bot? And maybe it's because of your clientele, or I'm curious.
When we rolled out our voice bot, in our chat bot on our website, there definitely was a learning curve. I think it took members some time to acclimate, to the bot. But once they started to get acclimated to, they actually appreciated, versus waiting 3 to 4 minutes to talk to someone live. And when asking kind of a rudimentary basic question, ultimately led them and get them served a lot faster than if they had to wait on the phone. So, in time, it kind of, took a little bit for them to acclimate to it, as most members would have to acclimate to any new technology, and we do too. But ultimately, it led to a more impactful service. And so a lot of, when members call in with a more complex question, they can, go straight to human and have, a longer, more robust interaction and, ultimately get a higher level of service, because our team isn't just, hearing and seeing one call after another, because the voice bot is now picking up on some of those. And so they're more inclined to have that more robust conversation, with a member.
That's very interesting. So if you don't mind, I'll push you and ask you one more question on this, because
yeah, of course.
You mentioned two statistics that are very interesting to me. 50% of call volume is essentially handled by the bot, but then the rest of the 50% were more complex questions. How is that sort of experience turning into better NPS, or how from your employees and from your customers, or how is that working out? And are you monitoring? I'm going to ask three questions, but you could choose, right? The second part of the question is going to be, it's always difficult to start to say, here are the call types that I want to deflect into a bot versus to a human. How are you monitoring, measuring the impact of that and changing it, right? Because over time, you want to figure out how much more can you have the bot handle, probably, right?
Yeah, and so we are monitoring the type of calls and questions that are coming into our voice bot. And so we are working with one of our vendor partners that's driving that, AI-based technology and, getting some upgrades and changes as it respects to that, so that ultimately, it can handle, more of the volume. But, and more on the, team member side, when a call reaches them, it's more anecdotal. We're not necessarily monitoring those per se. I mean, we do have a system in place where our leaders within that respective team, based on a sample basis, will look at calls to see if, they meet some pre-identified standards that we have in place from a service standpoint. And ultimately what we've found is that those service standards are improving significantly since we've implemented the technology. And so, our team they have more time on their hands. They can have more robust conversations with their members, and ultimately, based on our standards, it's equating to, much stronger level of service for our members.
Yeah, that's fantastic. So I'm going to, maybe take a detour a little bit, but I think it's a related topic, right? And we don't have to stick to the voice bot example. Maybe it's something else. But personalization is something that now everybody expects, right? We are in the Netflix and Amazon economy. And when you look around in the credit union industry, that is not yet a core part of the differentiator, right? So products and service were always core part of the differentiator. Personalization, they said, hey, Cap Ones of the world, Chase of the world, they have more technology investment, they're going to do it, right? So how are you, what do you think? Where is the credit union industry? Where is EFCU? How are you approaching this?
I think the industry as a whole is pretty far behind, not just us not just credit unions, but, really smaller community banks as well. And so that's something that is a big part of our strategic plan going over the next few years is to build more personalization into, all the various channels that we have. One way that we ultimately started is, leveraging some of our information and data to do more focused marketing campaigns as well, so that if a member, we don't just send out an email blast as it relates to HELOCs, a HELOC marketing message to all 73,000 members. It's those that have the predisposition to actually want and need a new HELOC, and so leveraging the information and data that we have to provide those more specific, tailored marketing messages is something that we've been ultimately doing. But, it's we're in the process of changing cores. We're moving to, a Fiserv product to Correlation Keystone. And within that plan, we're going to invest in a pretty robust data infrastructure, data warehouse. They'll be more robust than ultimately what we have in place right now. It's really hard for us to get to a lot of the information data that we have. We're going to invest in that architecture so that we can have and get easier access to our information so that, and once we layer in artificial intelligence and, machine learning, some additional technology, ultimately my vision is to make it more robust and automatic as it relates to personalization so that, the technology is looking at the type of transactions that, might be happening on a member's debit or credit card. And, maybe they're going to Home Depot or Lowe's, some kind of, home shop, and maybe that will tell us that they're working on some big major renovation. And, then we can more specifically target market a HELOC or another product or service that, may meet their respective needs. And so trying to get a clear picture, leveraging all the data that we have to offer more specific tailored marketing messages through online banking, through, email blasts, text messaging, and so on and so forth. So that we can build in and layer in more personalization throughout our omni-channel experience with our members. And so ultimately that's the end game and where we're trying to get to. We're taking baby steps towards that. A lot of that, ultimately is getting our data infrastructure right so that we can have and leverage the power of our information that we have for our members to drive that personalization.
I hear this frequently. I think you hit on one of the topics that I frequently hear, right? Which is in the credit, especially in the credit union space, getting access to your member data from your different vendor partners is very difficult. And everybody's trying to figure out what that investment path looks like, because everybody knows what the end game is, but what are those steps to get there? And the other conundrum that industry usually faces is as you are taking the steps, technology keeps evolving at a much faster clip. So what do you do to keep course correcting on an ongoing basis is a big dilemma, right? Because you might plan to say, hey, I want to do this over the next 3 years. Is that the horizon that we can even think about right now? Things are changing so dramatically within a year, right?
I know. Yeah. I mean, typically when we are strategic planning, we're looking out maybe every 3 to 5 years. I think, any time, any longer than that is just, you can't really do because technology, really financial institutions, us included, we're more of a technology company, becoming more of a technology company than, a brick and mortar shop, 65% of our members, use digital banking and, not a lot of them use our branch network. And so, really technology is a key driver of how we serve our members and really is going to put us in a position to be competitive with a lot of the other financial institutions, in the greater Baton Rouge area. And so, we've been investing a lot from a technology standpoint. And, ultimately our theory and approach is we're trying to find vendor partners that, are willing to constantly look at ways to improve and get better. And so that's one of the key criteria that we're looking at when we're, before we ultimately select a vendor. And, quite frankly, too, if we have a vendor that, ultimately after 3 years and it's a 5-year agreement, is not putting us in a position where, we can adequately serve our members and, and help us evolve to continue to keep pace with a lot of our competitors, I'm not afraid of, paying out the rest of the contract and moving to another vendor partner. And so I think, we're not in a position where we can wait out a couple of years if someone's holding us back. And so if I have to make the investment, a multiple 6-figure investment to bail out of an agreement to go with someone else, I'm not afraid to do that as well. Technology is just evolving and changing too quickly. And our members have high demands and expectations of us. And so, I'm not afraid to, end that agreement and that partnership early, if they're not carrying their weight.
That's the right way to do it. And I think that's a very forward-thinking way of doing it, right? Holding the vendor partners to the technology advancement is important. I think if you're just relying on your teams to do all the technology advancement, it's while paying the vendors to do something else, it's not going to be It needs to be a shared responsibility.
Yep.
And love your thoughts on this. I think these are very, very forward thinking and differentiated thoughts. So it's a very amazing story. I'm going to switch gears a little bit and talk about the other side of AI, which is a lot about, there is a financial responsibility that comes comes with handling AI and deploying AI. There is a responsibility around data and compliance and building member trust. How are you thinking about it? What are your guardrails that you put in place? How do you come up with them?
Yes. So we implemented a pretty robust policy that we put in place as it relates to AI, an important and strong governance structure where anything new related to artificial intelligence ultimately. Our process is typically we have an internal AI committee that will vet anything as it relates to any new AI initiatives. And then about a year and a half, 2 years ago, we created a new governance structure, namely rolled out a variety of different committees, board level committees, and one of them being our risk committee. And so, we worked with the risk committee, put in a pretty robust, AI governance structure. And ultimately, they are very in touch and abreast of anything as it relates to new AI initiatives. And so, anything that we're looking at from our artificial intelligence rolled through our internal committee. We spent a lot of time vetting it, making sure the organization that we're considering partner with is, very careful with our member information and member data. Trust is paramount. If we ever lose that trust with our members, then, that relationship can go bad pretty quickly. And so we're very careful as it relates to who has our information, how is our information protected. And so that is, very critical as well. And then also anything that we're looking at from an artificial intelligence standpoint, keeping a human in the loop is very critical in my mind so that, someone is monitoring the AI to make sure it's performing the way that we want it to be performing. And so, we have a human in the loop in anything as it relates to artificial intelligence now, and then anything that we're looking at, in the future as well. And so, between our board level committee, our internal committee, and our various people and team members that are, involved in the intimate processes at the ground level, we have a pretty robust governance structure in place so that, if there are hallucinations or if there are changes and ultimately that lead to outcomes that, we don't want, we can pretty quickly adjust. And so, things won't snowball and catch us off guard. We'll catch those things early and be able to kind of nip them, at the ground level.
I think that's all those three things are critical as you go forward because, like you said, trust is of paramount importance to members. And that takes a long time to earn and one instant to disrupt. So,
yep.
Especially with AI, and you use the other part of this whole equation, which is human in the loop, which is very critical, but very difficult to figure out where does the human sit in the loop and how frequently, how often do you review and all those things. So I'm sure it's a journey, and I'm sure we can take this on a long ride. But it sounds like a great idea. So now, I'm going to move over to a little bit on the team side and the software side of the equation and get your thoughts and advice and opinion for the audience as well, right? So the first part is, as AI got introduced to the world, it took us a good 2 years. AI has been around forever, right? It's just that over the last 2 years, it's become the thing, right? How do you ensure that people in your team are not just feeling uncertain, but excited?
So I'm pretty open with a lot of our team, our frontline team, and everyone in the middle as well. And so, I've been, from the get-go pretty clear on what our expectations are from a technology standpoint and, leveraging artificial intelligence. And so, I made it clear to a lot of the team, kind of what we talked about earlier, the technology that we're making investment in, including artificial intelligence, it's not going to replace them, their jobs. My goal is to get them to a level where they can serve members better, and then also think at a higher, more strategic level. And then two, really focus on, challenging them to learn and grow in the technology. And so, we have Copilot that, we've turned on and made available to enterprise-wide, licenses where, all of our team members have access to ChatGPT, Copilot, and can leverage the technology appropriately. And so, we're at a phase where we're really trying to challenge a lot of our team to start using the technology. And then also gearing up a variety of training that we're going to roll out with the team as well, as far as, how to prompt Copilot. And, because prompting is very critical as well. You can't just throw a question in there and get the answer that you want. You have to know how to ask the question and, set the technology up to be able to get the answer that you need. And so, we're in a position now where we're trying to, challenge a lot of our team to start to, invest time and effort into learning the technology. And we have, there's a variety of other initiatives that we're, working on as well, where we have provided more in-depth training. Like we have a development team that we're working on bringing up, as we move cores, and, so they're pretty active as far as using Claude, from a programming standpoint, and have taken a variety of training as well. And so really trying to challenge the team to get in there, learn the technology, just start playing with the technology. I mean, that's how I learned, how to leverage it as well and how to prompt, and then we're partnering too with kind of a partnership with Luminate, Louisiana Credit Union League, and then the College of Computer Science and Engineering as well, to develop a training that we can ultimately roll out to all the credit unions in Louisiana that's going to help acclimate them to the technology, how to prompt AI, how to, take some, some of the nuggets too, and just implement it in their own shop so that they can see an immediate, efficiency and return on investment as well. And so, there's some different things from a training standpoint, that we're working on as well to start to roll out to the team. But really, I've been just challenging my team to just get in there and start to learn the technology.
Yeah, I think the first step is to stop being afraid and embrace. And once you get over that hump and start learning what to do with it, right? I heard a very interesting nugget recently where someone was comparing the advent of elevator to how buildings are being created, right? So there was a time when the highest building could go was 5 stories, because that's how far humans could lift, and that was the limit of our thinking. And once elevators started coming up, people thought, oh my God, what's going to happen to me? And then there were the elevator person job, right? Where you punch in the number, and that job became useless because, but then the elevator person did something else, but it essentially pushed our thinking. That's what AI is doing to us, right? I mean, we had a limit to our thinking, and now you need everybody to embrace that, to sort of think about what's the next skyscraper out there. And it's a collective sort of thinking. Yeah. How, as you are building this, right, I'm sure you've seen a lot of things come out. What has been your biggest surprise and the biggest, for lack of a better word, on both sides, right? Good surprise, bad surprise of using AI?
I think, a good surprise is just you can see immediate efficiency gains. I mean, I've seen it with my own work. Having ChatGPT, Copilot, Claude, whatever, just kick things off, put together either maybe it's a memo that I'm considering putting to, presenting to the board. Now ideally that memo that it's going to spit out, with some of the, the support and kind of setting up the story and, the case for whatever ultimately I'm presenting, as the initiative to try to push through the board. I can't just, present that verbatim. There's a lot of tweaks and adjustments you have to make to it. But, it really does a great job of creating that base to help me, make the tweaks I need and save me a heck of a lot of time, as far as my research and investment, as far as drafting anything. And then, that's with, a lot of the different, email communications that I'm looking at, board communication. There's a plethora of efficiency gains, immediate gains right there. I think, one of the cons or one of the challenges is, we have, like I said earlier, keeping our member information safe is very critical for us. And so we have different controls that we have in place where, basically the information that we put into these various models, they don't leave, the credit union ultimately, based on the licenses that we purchased, and we only have a select amount of licenses. And, the way these different LLMs and models, they keep advancing, now Claude seems to be kind of the stronger model versus ChatGPT. And so, you have all these different individuals that prefer a model because, that's the latest and greatest thing. And, it's constantly evolving and changing, where ChatGPT next week might be a little bit ahead of Claude and vice versa. And so, trying to keep pace with, the technology that our team members ultimately need so they can, do the work they need to do in an efficient and effective manner. And grow in their skill sets and knowledge as it relates to learning how to, play with and use these various models can be challenging because their preferences change. The strength of the models, changes and evolves week to week or day to day even. And so, trying to keep pace, with the need that each of our team members and the preferences that each of our team members, need can be a little bit of challenging.
Yeah, you're essentially, sort of trying to figure out what's the next best thing, and should you buy, partner, or just train and wait, right? Yeah. And that's a decision that's a little tricky all the time to continuously be making, and it is unnerving to think about what the Claude and OpenAI and ChatGPT are doing, right? I mean, Sam Altman once said that every new release will have like thousands of small businesses go out of business and thousands new start. But that's economic effect of what they're doing is insane.
It's crazy. Yeah, it's it's really exciting to me. It's the way the technology's evolved and changed, and just the potential. Especially as it relates to financial services, I see so much potential, and I'm really excited about it.
Absolutely. As you go through your, and I think we might have already touched on this, but I'll ask you the question anyways. Is there any area in the credit union industry, financial services industry, that you think is not getting enough attention from a technology perspective, from an AI perspective, or you feel like we're at the right level?
I feel like as an industry, we have got a long way to go. I see a lot of financial institutions that are, really more satisfied kind of with where things are at, and maybe not willing to, jump in and make the investment from a technology standpoint. They got a good return on assets. They have a good, nice and strong net worth. They have a robust, ultimately, group of members that continues to drive, a strong financial performance. But, our strategy at EFCU, a lot of our demographic, tends to be a little bit, older, with more, that's not atypical with, credit union land. But, we're really trying to set our tech stack up and our level of service from a technology, leveraging technology to meet the needs of that next younger generation. We have, we've got a big challenge ahead of us with the great wealth transfer. And, a lot of our members, their next of kin, their siblings don't necessarily bank with us. And so, that their deposits ultimately are going to go to that next generation. And so we spent a lot of time in different high schools teaching financial literacy. We have partnerships with Southern University, which is HBCU down here, with LSU. And, we're trying to, not only build different ways to bring in that next generation, but making the investment that we need to make to keep them with our institution as well. And so, I think a lot of financial institutions, especially the smaller institutions, have become a little more, set in their ways because their financial performance has been so strong. And, they've leaned on that, kind of that demographic that's been, with them for a long period of time. But we're really trying to look out the next 10 to 20 years when those monies, those deposits will start to move to that next generation. And so we're trying to bring in kind of a younger demographic, and set up our tech stack and service components in a way where, they will not only want to come to the institution, but stay with the institution.
You brought up a very, very important and interesting topic, right? Is the great wealth transfer. And that is the one where I do feel like technology could do a lot. And it's not just about, I think one part is to set up the younger generation and be attractive and make sure that you are building that pipeline of membership. But the other is, you brought up an interesting point, right? Knowing the next of kin, and educating them, educating the members. And what I've also, heard, seen happen is it's very difficult in the usual banking world, unless you have assets, a gazillion million in assets. You're not treated equal to the others, right? And so essentially, you don't know if you're getting some inheritance from some other state, how to set up estate taxes, how to set up your entire portfolio, whatever it is, right? It could be whatever small sum, so that your next of kin is not going to have to go a lot of trouble in getting access to the funds that you really want them to have. And that knowledge is a lot easier now to impart to folks and to actually create a whole structure, right? So, for example, let's say you have some relative in Germany having a property that they want to give to you. How are you going to get that? And you don't know anything. I'm just giving wild examples, but these are real scenarios that are bound to happen as we go to this whole, like $87 trillion in wealth transfer over the next few years. That's a big number.
The vast majority of our deposit base, roughly 70% are the average age of 75 years old. And so, that's a significant risk in my mind. And so, we're spending a lot of time and energy and effort into putting ourselves in a position to be able to not be negatively impacted by that, great wealth transfer. And then, when I look at that next generation that is going to be receiving these, some of these funds, I think of, my own kids. They prefer, the Cash Apps of the world, the Chimes, so they want a very intuitive process that, is very streamlined, live, frictionless. And so that's what we're trying to do, as far as how we're building and investing in our technology as well, to provide a very personalized, frictionless, relatively frictionless as much as we can, just given the compliance, items that we're ultimately, playing with. But, we really need to set ourselves and think more like a fintech, and how they've created the different experiences that they have. Because that's what that next generation is using. They don't know what a checking account is. So we have to meet them at their level and their needs using a terminology that, they understand as well. And so, ultimately that's kind of, our game plan moving forward as far as, attracting and retaining that next generation.
It's a very, very interesting topic, which I think, could be a topic of our next podcast, because I think there's just a ton of things happening in that wealth transfer space that a lot of us need to start thinking about as well. I'm going to ask you one final question. I mean, you've been amazing, and I'm really, it's a very forward-thinking credit union. It's led by a lot of thoughtful vision on AI, on how to embrace technology, and sort of lead the way in terms of how a credit union is being run. So I've thoroughly enjoyed the last few minutes with you. One final piece of advice. I usually wind up asking this. I have kids in college. A lot of parents and mid-level career professionals are going through sort of this whole dilemma of what to do next. What's it going to be, right? Some degrees are not as useful. Some degrees may not be useful because of technology in the next few years. What advice do you have for them?
I think it's important to, look at the degrees that ultimately are going to, pay them the highest return on investment and dividend. So I think like a lot of the technical skill sets, like, accounting and finance. I mean, there's not as many accountants that are coming out anymore. There's not a lot of CPAs anymore. And so, that's why I'd encourage a lot of people to, and can strongly consider the accounting route and, ultimately getting their CPA. It's, been very important and, paid a lot of dividends for me. But also think like with artificial intelligence, and I've had, this conversation with the chair of the computer science and engineering division, at LSU. And I think those liberal arts education, again, I'm biased because my undergrad was a liberal arts institution. But, I mean, with the advent of artificial intelligence, I think being able to think creatively and critically is going to be very important as far as, we talk about kind of the scope. You don't know what you don't know. And I think you need to be able to think creatively and partner, that creative mindset with artificial intelligence as far as, even knowing what in the realm of possibility, that there is with artificial intelligence. And so I think it can take a creative person, and someone that really can think through critically and then have them partner with artificial intelligence to get the true bang, for your buck, if you will. And so I think, getting a strong liberal arts education and marrying that with, something that is going to be needed in society, from an accounting standpoint. Accounting is a language of business. There's always going to be some aspect of business, regardless, of the evolution of artificial intelligence and the efficiencies that we're going to experience from there. I know with artificial intelligence, they're talking about a lot of jobs, people being able to take a shorter work week and maybe not as many jobs going to be available. But I think a little bit differently. I think just like with the Industrial Revolution, the types of jobs will evolve and change. And I think, ultimately a smart organization that believes in strong governance, there's always going to have to be, some kind of human in the loop to a certain degree. And, I think the types of jobs are just going to be evolve and change ultimately, as technology changes.
I'm glad you didn't say become a plumber or take on some of the hands-on jobs. But you're absolutely right. I mean, it is it's a interesting thinking, right? And had I asked you this question last year versus this year and versus next year, I'm sure there's going to be some similarity and some evolution. Listen, Tom, this has been a fantastic conversation. Any parting comments that you would like to have?
I would just like to say thank you. Appreciate your time. I, thoroughly enjoyed the conversation as well. It's been fantastic. So, really appreciate it. So thank you.
Absolutely. Thank you so much, Tom.